I was looking at Shell's R&D capital expenditure, and it's only about 10% of total on renewables, which to me seems like a very low number if they really are intent on doing this full transformation and focusing on renewable sources of energy. It seems unlikely that some of these traditional oil and gas companies will be able to compete with the incumbents in that space. There are lots of smaller companies out there who have the technical expertise and the know-how already. Is it likely that we therefore see a huge wave of bolt-ons and acquisitions led by the traditional oil and gas companies because it's simply easier for them to acquire the knowledge than just to create it?
Well, look, it's certainly true, that we see their sort of capex budgets going to renewable energy and so on is still a fraction of their oil and gas, right? But Shell will say, for instance, that they need their oil and gas business and they need the returns from that still to be able to put money into those clean energy businesses. So that's one point, right? And then speaking to the competition, I mean, you're right. There's incumbent utilities. A lot of what these oil companies are doing now is sort of moving onto the turf of big companies like Enel, like Iberdrola, and that are active globally, that are building these wind and solar parks. And we've seen them compete. In some cases, there's a recent seabed auction for offshore wind parks in the UK, where we saw very high prices, where we saw some of these oil majors moving in, and it's not the first time. So we're seeing them out there. They're doing more deals already. They're buying certainly into these big assets. They're buying some companies in some cases, especially in sort of the clean technology space, when you're looking at sort of the next generation of what can be done in this renewable energy industry. But that remains to be seen, right? There's certainly a lot happening. We're seeing them in a lot more places in the market, sort of making moves already. And that's certainly accelerated over the past year, even if, as you point out, that share of their overall spending is still pretty low.
Yannic, there's been a pretty interesting difference in the U.S. versus European oil giants' approach to addressing climate concerns. U.S. companies have effectively stopped short of setting any emission reduction targets, and they've stopped short of doing as much as the European majors have. Do you see that gap closing? And if so, what could trigger the U.S. companies to change tack and be more ambitious and more concrete about climate change goals?
Yeah, that's a really interesting point. I mean, we're starting to see some action on the U.S. front there, right? So the big oil majors in the U.S., like ExxonMobil, like Chevron, they've started putting out more disclosures on their emissions, which is sort of the first step towards action. They have put out some emissions reduction targets, but you're right, they're not as comprehensive as what we've seen from the European majors, from Shell, BP, and Total, and some of the smaller companies in Europe. So they're definitely still behind on that front. But they will say, they are doing some spending. Exxon just recently said they will spend $3 billion over the next 5 years into putting that into a new low carbon business unit. Like I said, they have put out some targets, and we're also seeing some action on the regulatory side. So, for instance, some of these companies in the U.S. This spring asked the SEC, the Securities and Exchange Commission in the U.S., to dismiss some shareholder resolutions specifically focused on emissions disclosures and reduction targets. And the SEC did not do that, so they had to deal with that at their own AGM. So, we're seeing some developments on those fronts as well.